amplification ratios are great, but again, I'll piss people off. Don't care. I've talked to a lot of individuals that I know that own strategy shares in size. They don't care about Bitcoin per share, and they don't talk to me about amplification ratios. They talk to me about the different dynamics when it comes to the short interest. They talk to me about the options market, so on and so on and so forth. So I think that these ratios and KPIs are very, very useful in terms of sending a message, but I don't know if they're going to be very useful in terms of long-term driving the strategy that they initiate on a daily basis.
Let me ask you, Adrian, are those people that you're talking to, are they more like traders where they're trading the amplification, or they're long-term holders?
They're long-term investors, and they're options. So let me be more specific. If you're talking about options traders, yes. If you're talking about people that rotate in and out, no. So a lot of the people that I know that trade MSTR options, they fall into two camps. They're long-term holders that trade options, and that they're also traders that trade options. Most of the people that I know, I can only speak to the cohort that I know. They are long-term holders that trade options.
Yeah, makes sense.
And they have thousands and thousands and thousands and thousands of shares.
Yeah.
So they're the ones that I'm referring to when I'm talking about the options market dynamics. And also the few individuals that I speak to that are more on the institutional side. I'm not going to say any names. Again, there's people that there's about messaging. You're talking about one thing publicly, but privately, your investment strategy is different, right? So publicly, you understand the importance of a narrative. Privately, you understand the importance of managing your own book.
Yeah.
And that's what they're doing. And what I just hear consistently is, it's not about application ratios. It's not about Bitcoin per share. It's about what can I do in the options market? What is the share price doing? How much money can I put into stretch, and how much money can I get back on a dividend? How can I arbitrage that? Can I use the stretch dividend to buy MSTR shares that I then play in the options market? There's all sorts of different things that come up where these other KPIs are just not that much of a consideration.
So slight different subject, but with this new announcement of SEDA going daily, does that change how you're thinking about personally investing in Stretch versus SEDA?
Me?
Yeah.
I mean, I own SEDA and I own Stretch. I don't think it's gonna. It doesn't change anything for me, again, because I'm a person that never really bought into the whole arbitrage between the two. I bought them, I held them, I got the dividend. That's all I was really concerned with. I didn't really do drip or anything like that on it, because in my view, the whole point of getting the dividend is to have income that you use.
Yeah.
So what I've been using my income from, and I think I did a post about this, is I've been using it for my API tokens on all my AI usage. So it's turned that into zero cost. And my token usage
nice use case.
Yeah, and my token usage is ridiculous. So that's why I was like, how do I prevent myself from constantly dipping into my rolling income? And I just said, well, let me just put X amount of dollars in Stretch and say that, get the dividends. And I've been literally taking the dividend and putting it into my token usage. And it's been working out great, because that's a multiplier, right? The tokens are making me very, 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 very productive in terms of the automations, in terms of the algos and whatnot that I'm refining and reworking. And essentially, I've turned that into a zero cost event that I can then scale. So
beautiful.
That's awesome. You're living in the future, Adrian. That's awesome. I assume you're a long-term accumulator of MSTR. Do you plan buys around MNAV? Like when you think MNAV is 1.1 to 1.2, that's like a lump sum moment? Or how do you think about long-term accumulation of MSTR?
So I have my hodl position that I haven't touched, and I have positions that I've rotated in and out of. So you guys have probably seen me say, if MSTR drops to X, I'm backing up the truck, right? Whenever I say that's a quick swing trade. I buy it in when it's low and I get out again when it's high. So that's what I've been doing. I've also done similar to NVIDIA and Tesla, but NVIDIA is also the other equity that I have a hodl position, but I've also been rotating it out of. In terms of MNAV, so this is where I'm going to, again, buck the trend, but when I talk about MNAV on X, I'm not speaking about someone that has a theoretical opinion on it. So I've actually been modeling MNAV out. I've modeled MNAV out from the EV MNAV side when they made the switch in early 25, but I've also been modeling MNAV out from the longer term side since they've adopted a Bitcoin treasury strategy. In my view, if you really want a true understanding of MNAV, you have to use what I call pure MNAV, which is Bitcoin price times Bitcoin holdings over market cap. That is the true gauge of market sentiment.
Sorry, can you
Enterprise
say
value.
that again? Can you say
What
that
was that?
again? Can you say what that is again?
Oh, you just take Bitcoin holdings times the Bitcoin price, and you have them under the market cap. That's how you get it.
Okay.
So that is how I use MNAV long term. Before that, I used to differentiate MNAV using fully diluted shares versus diluted shares. That's another way I used to do it. When you model this out statistically and you do like structured variable analysis, Bayesian analysis, so on and so on and so forth, different kinds of statistical modeling, pure MNAV, that is just a derivative of the Bitcoin holdings and price and market cap, gives you a more accurate gauge of what market sentiment is doing. Because when I model it back and I do something called change point analysis, and I'm getting very, very technical here, so I apologize. But when I do something called change point analysis, whenever the price has dropped off a cliff, in my script, in my algo, the diagnostics pops up change point dates. And if I can look back at the price action, price has always dived after change points. So what that tells me is, and I try this with fully diluted shares, diluted shares, undiluted shares, market cap, and Bitcoin price derived MNAV. That's the long-term modeling that I have. That is more accurate of a gauge of what price does in terms of, or what price has done rather, in terms of market response. EV MNAV is actually the worst if I'm trying to look at what the market is doing because it's contaminated by capital structure. The preferreds are included in that. So it contaminates the signal, quote unquote, if you're trying to look at a gauge for what MNAV is doing and using MNAV as a gauge. And I'm saying all that to say this. The reason why I don't use MNAV is because I've been modeling it out long enough to know that you cannot predict what the market is going to do based on where MNAV is. You can only see what the market has done. And then looking at what the market has done is giving me two data points. One, pure MNAV, whenever it's fallen off a cliff and whenever it started to trend down, there's been clear signals in the data that it was going to happen when you look back on the data. Two, strategy and other treasury companies, when you model them out in terms of a holistic structure, so in case of strategy, that's looking at MNAV, that's looking at the options market, that's looking at realized volatility, that's looking at implied volatility, that's looking at gamma exposure, open interest, so on and so on and so forth. It has traded in very, very specific regimes that I like to call them. In those regimes, there are also two additional realizations. One, when Bitcoin is going up, the regimes move kind of in tandem. When Bitcoin is going down, they do this. And what that means is when Bitcoin is trending down, strategy price action decouples from Bitcoin. So you have a reality where, how do I trade this equity if I'm using MNAV? Well, when MNAV is low, it decouples from Bitcoin. When MNAV is high, it's more closely correlated with Bitcoin. So do I change my strategy based on what Bitcoin is doing? Okay, I tried that. Then there's been other times where it decouples even further. Bitcoin goes up and the strategy goes down. So again, that's just using MNAV as my main gauge, right? That's why I say I don't use MNAV. It's not because I have an issue with it. It's because I've modeled it out, and it's not something you can realistically trade on for long periods. If MNAV's at like 3, and you're saying, oh, the market's kind of overheated, you're making a subjective assessment, but it's likely that MNAV can probably drop down at that point to 2.5. So if you want to use that for short-term trading, sure. But the only trading that I do is with options. And I don't look at MNAV. I look at realized volatility. I look at implied volatility. I look at all those other factors. And that was a very long answer. I'm sorry.
Yeah. Do you think what Saylor said, where he said, I'd love to see MNAV go from 3, 4, 5, 6. Do you think that that's just bull talk and has no basis in reality given the current strategy? Or do you think that there is some combination of macro and operational efficiency and overall market awareness that Bitcoin and strategy are viable and the future, the future base layer of money and the securitized layer of that base future of money. Like, is there a combination of events that you think could actually lead to MNAVs of 4, 5, or 6?
Well, so Saylor did say that, but he also, remember what I said earlier, he said that market sentiment, belief, and so on and so forth was going to drive MNAV. So
yeah, which was a huge like nod to you, by the way, because you've been on that the longest.
Yeah, I have, with the most attacks for it as
Yeah.
well.
You've earned it.
So here's the reason why I think that it's important. Yes, I think that MNAV can be higher because MNAV is sentiment. It is market sentiment. When Bitcoin is at eventually at 150, 200, 250, so on and so forth, the overall sentiment is going to be obviously very high. And I think strategy can see MNAVs of 3 again at some point, maybe even 4. 5 or 6, that's a little bit much. That would have to require a blowout in Bitcoin, right? A real blow off top. I also think that in terms of Bitcoin price action, we were at 126. We dropped down to I think it was just under 70 for a bit. Then we trended back up.
60 actually.
Oh, 60. Yeah, there you go. And then we trended back up. The future of Bitcoin is still being determined in this next 1 year period. And what I mean by that is if we see like a drop down to 40, then the cycle bros are going to come back and say, see, we're in a cycle again. But I'm bringing it up to say that right now, Bitcoin is in a spot where I think it's becoming truly steady state in a sense of we have the ETFs, we have the financialization of Bitcoin through strategy, we have, the little bit of progress, I guess you can say, with the SVR in the sense that the US government's not going to sell any Bitcoin, right? The narratives are piling up. If things stay where they are right now, and then we, go to 90, 100, and we start trending back up in 27 into 28, and so on and so forth to the next halving, strategy is going to disproportionately benefit from that because the Bitcoin treasury space is becoming the Bitcoin space. And in my view, the Bitcoin miners that were attracting a lot of attention away from strategy, they're moving more purely into the AI space. So they're going to attract a different investor cohort. Altcoins, sorry, altcoin bros, they're dead. Ethereum is still around, Solana is still around, but I think the meme coin cycle that we had, that kind of killed the last altcoin potential because there was one thing to have thousands of altcoins, but now we have millions. There's too much dilution in the space for anything to really do anything, right?
And I think the treasury companies actually stole a lot of the thunder. Like obviously you can't compare those two, but what I've seen like before strategy and all the other treasury companies got popular, altcoins were always the way like to get more Bitcoin. That whole narrative of invest in something to get basically more Bitcoin, or like you outperform Bitcoin, is just purely on the treasury company side now. I feel like I feel like treasury companies might have like slowly killed the meme coins.
Yeah, so that's something I posted about. I think Adam Bacchus posted about it. Other people posted about it. It was treasury season. We didn't have alt season. We had treasury season. And I think that to your point, they stole the thunder from the altcoins. They really did. Now, all that kind of plays into what I'm saying here in the sense of when strategy is already the primary vehicle for leveraged Bitcoin exposure, when it becomes the only vehicle in the space for Bitcoin exposure, with a few smaller treasury companies getting interest, like, Metaplanet, Strive, so on and so forth, the growth is going to be concentrated even further into Bitcoin, with the miners and all these other alternative plays being moved into AI, HPC, data center plays. The concentration is going to become even greater the next cycle. So once we get through this price action here, I think that seeing MNAVs of 3 for a strategy isn't impossible. But I also think, if I'm being fair, I don't think we're going to see Metaplanet blow out to 15x MNAV either. That's not going to happen again. It's going to see a multiple, but I don't think it's going to see those kinds of disproportionate multiples. Because what we saw this last year is that strategy was a beta Bitcoin play. The treasury companies were a beta strategy play, and people were going into them because smaller market cap means they can move up faster, and it can have disproportionate returns. And that's what we saw with the treasury companies. So now that that's died down and things are becoming more steady state, Metaplanet is doing the preferreds. You have strategy with preferreds. You have Stripe with preferreds. Maybe Smarter Web will get preferreds, or maybe we'll see more mergers and acquisitions in the treasury space with some of the other companies as well. It's going to become more consolidated, more concentrated, and strategy is going to get benefit from that. And I think MNAVs will go higher. And again, I'm sorry, I gave a very long answer.
What would be Saylor's incentive to let MNAV run past 3? Because isn't MNAV only valuable to strategy insofar as their ability to hit the common equity ATM to capture, Bitcoin per share at the premium? So like, why would he ever just let it run as opposed to capturing it for more Bitcoin on the balance sheet?
Well, he's not letting it run. Remember, he's not controlling MNAV.
We'll see this where there's nuance to your statement where it's like they don't have control over MNAV. It's true that they don't have control over it, but they do have control to some degree on how much they let it run above the premium, right? Because they can be hitting the ATM to kind of pull back the runaway MNAVs of 3, 4, 5.
Not necessarily, no.
No?
Here's why. They have I've actually watched the price action, and I've actually modeled the price action as they're issuing shares. They've issued in 2024, they issued at 2, it went to 2.5. They issued at 2.5, it went to 3. They issued at 3.25, it went to 3.5. They issued at 3.5, went to 4. The ATM issuance is not what's capping MNAV, it's market sentiment. And the ATM is issued as a function of market sentiment. It is not a driver or a cap to market sentiment. So to give your point some fairness, based on what I've been able to model out, in high sentiment environments like we've seen in the past, they can issue up to 15% consistently, and price won't move. They will not drag the price down. If they go to 2025, then the coefficient drag becomes much, much higher. The standard market assumption is 0.4 of a coefficient if you're trying to do a statistical regression model on just share issuance. So accounting for nothing else, not the options market, not anything. The usual coefficient is 0.4. If they start going to like 15, 20, 25%, you have to bump that coefficient up to 0.8 or 1 or 2. And then the drag starts to increase. But even in that event, the drag on price, and when I say drag, I'm talking about attribution. So again, with this modeling, you're only assuming share issuance. You're not controlling for anything else. So it's a very, very noisy aggregation. But it goes from 0.0000016 to 0.00028. So even if they're issuing shares into a high sentiment environments, they would have to go absolutely crazy issuing shares before that overpowers what's going on in the market. And that would have to overpower short interest. That would have to overpower open interest. That would have to, short volume. That would have to overpower open interest. That will have to overpower what's going on in the options market. So Saylor is not necessarily letting it run. Now, coming to what you're asking about structurally, if they have a 1.52, 2.5, whatever MNAV, they're going to be issuing shares. So it's not so much about would Saylor let it run. It's more so about why would Saylor leave that much money on the table.
Right.
So to your point, I don't think that they will. And that's why I think that the messaging that they're using is very market adaptive. But as we saw with the MNAV guidance they gave last year, all people saw was 2.5. They didn't read anything else. All they saw was 2.5 and them issuing shares below 2.5. That's all they saw. They didn't see the fact that there was a very detailed SEC statement that said at management discretion. So I don't think they're going to put themselves in that position anymore. If they have the premium, they're going to use it.
And so, sorry, last question, guys. I know I'm monopolizing a bit, but So your modeling shows that the VWAP kind of ATM issuance of the common really does, as Saylor says, not move price, that they only ever, tap the ATM when they are not directly moving price either up or down.
Yeah, there's three different analyses that you can do, and there's three different analyses that I've done. Going back to 2020, so August of 2020, all the way till November 28th of 2025, I modeled out the ATM issuance the following way. I took actual SEC issuance, so based on the actual SEC filings going back to 2023, then I extended it all the way to 2020, assuming the same level of issuance. So I essentially serialized it over that time frame. Going back to 2020, it could be attributed to price 0.0003%. So that's statistically indiscrete from zero. And when I say attribution, what I'm saying is I'm doing a statistical model that's accounting for all kinds of market dynamics. And when you model those out statistically, this is the attributable factor towards potential share issuance and how it could affect price. But that is bidirectional. I cannot say that as positively correlated. I cannot say that as negatively correlated. That's simply saying that in potential price action, 0.0003. Going back to 2020. When I account for the options market, going back to August of 2024 to the last time I ran it in November 2025, it's 0.1. So 0.1% is what I can attribute to share issuance in terms of the price action. But again, that's just me saying potential impact. That's not me saying this is what it was. So with that said, short interest was several orders of magnitude higher. Options market, sector rotation, ETFs, implied volatility, VIX, the Bitcoin direction, all of those were several hundred times more attributable to price action.